All right, welcome. We have another episode, State of the Real Estate Market. So I believe everyone is here and happy holidays. Happy holidays to everyone. We got a great presentation going on today. We just want to make sure we got everything good to go. Looks like our audio is up, good to go. Let's see. But it looks like, everything is good to go. We should be rocking and rolling here. Excellent connection. Yes, I see it. I see it. Yes. Okay. That's what I wanted to make. I think we had some had a technology situation before. But hey, welcome to State of the Real Estate Market with yours truly, Chris Brown. This is the end of the year. This is the market update, the wrap out for 2025 as we pursue and dive on into everything. So for those who if this is your first time or if you haven't subscribed, be sure to subscribe to the YouTube channel. This is a platform that only do we talk about buying, selling, and investing in real estate, but we also talk about building generational wealth and health. Health is wealth. As you know, I am an advocate of that, so I always like to share that information and those tidbits with you guys as well. So, welcome to the wrap out that we have for 2025 edition of the State of the Real Estate Market with yours truly, myself, Chris Brown. I am a real estate developer, health is wealth advocate. And today we are talking about what actually happened in 2025 and what the numbers say for 2026. So, a couple of things that we will be discussing today so that you are aware how 2025 housing market actually ended. Give you guys that update. Expectations for 2026, and that's in regards to prices as well as sales. So, understanding the numbers. Current mortgage rates. So we're going to get an update about that. So I know you guys have been asking about the mortgage rates. What's going on, what's really happening out there. So we'll definitely chime in on that. Make sure you guys have that update. Other piece, why Florida and the Sun Belt markets are cooling but not crashing. I think a lot of people were talking about the market crashing, but we have not experienced a crash. So three concrete moves to set up for 2026. Uh, I'm gonna show you a couple of financial, call them hacks or just financial moves that you guys need to make if you are going to be in the real estate world, just to be aware of. So keep that in mind. So in this segment right here, we're going to talk about has 2025 housing market finally thawed out? So let's start with the big picture. What the U.S. housing market actually looks like as we close out of 2025. So we are aware that there was a 1.2% increase in existing home sales, seasonally adjusted annual rate of what was that 4.1 million in October. So we have these numbers up to October. The numbers are still being calculated. So as we finish out the year, I'm sure there'll be an additional update. So I'll make sure I share that with you guys. Also, zero point 0.7 decrease in unsold inventory, 1.52 million units equal to 4.4 months supply. So that's always something that we've been talking about, how the market has been shifting from that seller's market to the buyer's market. So now we have a bigger supply. Now, keep in mind, local markets are specifically different. So we'll talk a little bit about my market, but also keep this in mind that a lot of these numbers are national numbers, and it may be a bit different for your market. So always keep that in mind. So year over year, 1.7 increase in existing home sales, and then a 2.1 increase in median existing home sales prices around 415, 415.2. So kind of give you guys an idea of what is happening with the median prices, what to expect, and basically just, what else to be aware of as we move forward with this market. This market is extremely interesting. So I always tell you guys, understand what is happening out there. All right, national snapshot from frozen to a slow thaw. So, like I said before, we were up 1.2% month over month to an annual pace. Ooh, to an annual pace of about 4.1 million to the highest since February. So keeping in mind that these sales, you know, typically towards the fourth quarter, traditionally in the fourth quarter, sales have slowed down. So the numbers are a little bit different. Like I said, it's up in for the month of October. So this is October, November, December. As things are thawing out, we'll see how those numbers finally went through. So 1.7 year over year. Uh, I won't say it's a real estate boom when you see that those type of numbers, but it is something to be mindful of as those numbers do look uh, on the up and up. You know, a lot of people expected things to crash, but they did not crash. So with things not actually crashing, this is what position we're left in. So keep that in mind. Share this with you guys. All right, so inventory wise, about 1.52 million homes for sale, roughly 11% higher than a year ago. So, one of the things that I've been telling you guys about the supply and demand, the supply has increased just because a lot of people aren't buying homes as they previously were. There's a lot that plays into the supply. The supply could be the available properties. This number could be give and take because of properties that are actually being delisted as well. That is a big number that we'll be looking at moving forward, looking at delisted properties, but just keep it in mind. But the inventory has increased. So there's an inventory increasing. There are more homes available, but we also know that there's been a situation with the interest rates. So prices, national median, like we said, was about 415.2, which is up 2.1% year over year. Uh, which is a slower, is healthier appreciation. It, I think in the past we were experiencing 6%. Then obviously during the pandemic we were experiencing much higher numbers. But previously it was about 6%, but 2% is pretty healthy. So keep that in mind, guys. 2% is pretty healthy. Please excuse me. We are live. So you are getting it real authentic. I wanted to make sure I was a little bit under the weather, but I'm still bringing this to you. So pending home sales, so up 1.9% October versus September. So that little transition there. So it looks like there was a more pending sales, which is good. So it means properties are getting under contract, but still zero point 0.4 lower than a year ago. So it's still lower than a year ago, but it's up from the previous month. So these are signs that the market has a little bit of life. Traditionally, like I said before, this time of year, the market usually has a bit of a sell. It traditionally has settled in the last quarter just because you have the holidays. A lot of people are focused on the holidays and not buying homes. But we'll see how this all finalizes as well. We'll keep you updated. So affordability pause. So I call it affordability pause just because home sales are still low versus the pre-pandemic. We're not talking about during the pandemic, but prior to the pandemic, before everything went crazy. So because prices stayed high and the rates stayed above 6%. So that affordability piece, when the rates are high, people that monthly investment is going to be much higher. So that means it's less house that people can actually afford. And with the prices also going up, it's much less house that someone can actually afford because it's all about that monthly payment as in what they can actually pay out each month. So nationally, 2025 did not give us a crash like a lot of people were anticipating, but it definitely came to a screeching halt. Uh, it gave us a slow thaw, a little more inventory, modest price growth, but affordability is still the main headwind. And that's a big topic right now. Home affordability. What what are people doing? If city, what are different cities doing? What creative programming are they doing for affordability? Even with the builders, builders are experiencing this as well. This is something that we've talked about for a while, as in the different incentives that are available that are out there, and how those incentives are encouraging buyers to come back into the market because of the incentives, whether it be the rate buy downs or even uh, financial incentives that they're able to provide. All right. So, Florida and local focus. So, the Florida local focus. So, now let's bring it home to Florida and the local market because national headlines never tell the whole story. That's what I was trying to explain a little bit earlier. When you're looking at the big picture, you really have to narrow it down. Really focus on what your market has. I'm in the state of Florida, also looking at my local market, the Tampa Bay area. That's what my main focus is. That's what I really have to pay attention to. So basically, Florida news, closed sales up versus last year. So that's with strong rebound after last year's hurricane disruption. You guys remember the hurricanes? We had two hurricanes that hit, especially the Tampa Bay area. I think it was like within a week or 2 week period, we had two hurricanes. Median single family homes, 411, 105, actually down, a little bit down. So the price went down a little bit. Condo and townhome medians, about 300,000, down 4.8% year over year. And that has to do with a lot with, uh, especially condos and townhomes. The condos, there was new rules, new guidelines that were put into place, especially after the hurricanes. Uh, that really slowed the sale of actual condos. I'm experiencing it myself in my personal business, so I see it, and I've been paying attention to the market, and those are some of the things that we've been experiencing. So the supply, single family homes, 5.1 months of inventory, much closer to a balanced market. So 5.1%. So you guys got to keep that in mind. 5.1%. So traditionally, they consider 3 months or less to be a seller's market. Above that, that's where you're really switching into what they consider the buyer's market. So condos and townhomes are 9.3 percent, or excuse me, 9.3 months, excuse me, that shifting power towards the buyers in many condo markets. So, as I mentioned, there was a lot of rule changes with condos, townhomes, the interest of those, uh, and those supplies have gone up. A lot of people were trying to unload them, being concerned about some of the fees that are involved with it. That's what we experience, and that's what's going on right now in the market. So you're experiencing where those condos and townhomes, those are the properties that actually share a wall. Um, they're experiencing a higher point in the market. So it's always something where it's like, okay, it's going to be a little bit more of a challenge. So sellers have to be aware of this, as well as being creative and being a bit flexible, just understanding what your property has to offer and what you're trying to get at it. If it's you're just selling just to kind of just to put it on the market, this isn't the pandemic time where you're just throwing a property up there just to see what you can get. So pending sales, October brought a 23% jump in new pending single family contracts. Buyers rushed back into the market. There's a couple of reasons why buyers jumped back into the market. It was we did have some shifts with the interest rates uh, that made and then you had your builders that were doing a lot of things as well. So, local angle for you. For most people, my local MLS is the Stellar MLS. In the Tampa Bay area, we're seeing about 49 days on the market. Give and take, give and take. Median price is around 400,000 and list to sell price ratio of about 97.4%. So it's always interesting to see, these big numbers, and then you're like, okay, well, this is positive. So the Tampa Bay area seems to be pretty stern at 49 days on the market, 400K. So it really depends on the type of property that you're selling, who's actually placing their property. You have a lot of people that are here, but they're not willing to leave. They're not willing to leave the area, so they're not really selling their homes as much. So it's also keeping an eye on what's available, what the builders are doing, because the competition is there, especially with our builders. Sellers versus buyers. So the different types of markets, as I mentioned before, we it was a seller's market when we were during the pandemic. After the pandemic, we really started shifting towards buyer's market. The buyer's market really developed because of the interest rates. During the pandemic, we were experiencing at 3% interest rates. Now we're above 6%. So it's more than double what we were experiencing. So with that being said, you received that shift. The prices were going up. Excuse me. The prices were going up. With the prices going up, we experienced so many different things. The interest rates were going up. With the interest rates going up, we weren't getting a breather there. So it's something to keep an eye on. Let's really see how the numbers come in for the last couple of months of the year. We'll keep an eye on that. I'll be sure to share that with you guys as well. So Florida has shifted from the overheated sellers market to a more balanced market. Yes, we are definitely experiencing more of a balanced market. And in some segments, buyer-friendly market, especially and condos and long sitting listings. So that's something, especially if you're in the market, you have some leverage as a buyer. You have some leverage, but also be aware of what you're looking at. If it's a property that just hit the market, the flexibility probably isn't there. But if it's been on the market, especially over 90 days, that is definitely opportunity to possibly start negotiating. Not to go crazy, but it is an opportunity to negotiate. And it could be, keep in mind, and I'll show you a couple of financial hacks. It's not so much about reducing the price, it may be able to leverage a couple of different things, especially when it comes to the financing. So keep that in mind. All right, so the 2026 outlook that we have, is it going to be a comeback? Is it going to be a comeback, or is it going to be more of just a calm, mellow perspective? And a lot of people have been asking me this. It's just like, well, what's going to happen in the market? Should we anticipate something different? What's going to happen, Chris? So, what I like to share with you guys, let me pull this up here. So, let's talk about the 2026 because how you move in the next 6 to 12 months should be based on where you're likely heading, where we're likely going to be heading, not just where we've been, because we already know what the pandemic times look like. We're going to be shifting as in we're going to start trending towards where we're going to be going. So if we're going to start seeing interest rates go down, if we're going to start seeing prices go up, are they going to slightly go up? Is it going to be small growth? Uh, we'll see. So, with the forecast, let's see here. So, with NAR, National Association of Realtors forecast, existing home sales expected to jump 14% in 2026. I don't know what they're seeing, but we pay close attention. Lower rates and more inventory draw buyers back. Now, I would totally agree. If the interest rates really drop and not minutely come down. I mean, if they see a significant drop, like percent, like whole percents, I will definitely attest to wholesales going up. So national home prices projected to rise 4% in 2026. Eh, This is some of the information that's out there, but obviously we know what's been said in the past and what's actually happened. So that's why we look at this on a monthly basis. So we won't say that this is exactly what's going to happen in 2026, but hey, um, these are it's opportunities. So like I always tell you, stay ready so you don't have to get ready. Uh, if you're in the market to buy a home, it's an opportunity to negotiate. Other forecast. There's other, like I said, that was NAR's forecast. There's others that are other experts that are forecasting, but they're a bit more conservative. They're feeling that home values will go up around 1.3%. Zillow, and that was according to Fannie Mae. Zillow was saying that prices should rise around 1.2. Basically, it's still like that's still a flat market. So they're saying that we're not going to see a lot of movement. So transition, most experts expect modest growth, not a drop. So we were talking about this before that the real estate market was going to crash. Well, it definitely has come to a halt, as I mentioned before. It has slowed down. It has applied the brakes. So it's just about pause. But if you really look at the numbers, it's still trending upwards, but not as great as it has been in the past. So it still is trending upwards. So so keep that in mind. So your investment as your real estate investment is still secured and it is still going up. If you guys look at it like that, I know a lot of people want the market to crash so they can come in and buy up a bunch of real estate. I understand that. Trust me. But that's not what's happening right now. It's still slightly moving. So part of the regional story or update, some some of the overheated Sunbelt markets, parts of Florida, Arizona, Texas, already seeing prices softening. This is stuff that we've talked about, but this is what's going on, and this is what we're starting to see for the 2026. If it hasn't already experienced it, this is the trajectory where they're going to see some softening if it hasn't already occurred, softening of the prices. Um, More affordable Midwest, Northeast markets are seeing steadier growth. Now, I definitely have seen the Midwest. The Midwest is definitely more of the affordable. There's a lot of national news that's being projected regarding the Midwest being a bit more affordable. That being said, you're getting people that are moving out that way. They may be investing in that way. The Northeast, that's interesting to see that information came back. That the Northeast is they're seeing some growth. I know the prices are traditionally a bit higher. They had a lot of people move from those areas and then move obviously to the southern states, the Sun Belt states, state of Florida. We received so many people during the pandemic, but let's keep an eye on those. Let's keep an eye on those moving forward. Builder update. So, excuse me, guys. Home builder sentiment improved to a 6 month high in October, but is still below the neutral point. So, there it still seems to be optimistic. Like I said, the builders right now, if you are looking at new construction and you're looking at moving into, say, one of these communities, a builder will go with one of the bigger builders that are out there. Uh, they have some interesting incentives right now. What I mean by that, I mean like they're buying down the interest rates, they're paying money towards the down payment, upgrades, closing costs. Uh, there's a lot going on. There's a lot going on with the builders. They're really pumping. They're really trying to keep the buyers involved. And then when the inventory is a little shaky, uh, even though there's more inventory, but as a seller now, if you're placing your property on the market, you're really going to have to pay attention to the price as well as the presentation of the home. If it's not presented well and it's not priced correctly, it's going to sit on the market. Uh, Buyers are being a bit more their expectations are higher right now. They're expecting incentives. So the builders are stepping up. I've seen a few, and I get emails on a regular basis. So my perspective is, hey, the rates and prices are going to be a big factor in this. Okay, so if these rates are not going to adjust and we're not going to find additional incentives, we're still going to be in this soft market. That being said, it's going to be important how you, like I said, how you present your home. If you're looking to get it sold, if you're looking at commercial real estate is definitely going to be impacted by the rates. People right now, there's a lot of loans that are coming due. So that should be an interesting market that I will definitely be keeping an eye on myself on the commercial side. So um, let's see what happens. Let's really see what happens. So the smart play is the plan for the market that's more active and slightly more expensive, yeah, in 2026. I won't say that it's going to be a big, significant, cheaper market, but I would definitely see things being a little bit more expensive, a bit more active, because people have been holding out for a while. They got to make that transition. So they're probably just going to go ahead and get the property. Like I said, it's about being ready, staying ready, so you don't have to get ready. Right. So the rates. Now for the question everyone really cares about: mortgage rates and monthly payment. So this is this is what everyone talks about. This is, if you're in the market and you're trying to get a mortgage, if you're trying to get a commercial loan, everybody wants to know what the payment is. What is the rate? What are we looking at? 30-year fix is average about 6.18 to about 6.19% going into the holidays. Okay, so that's currently where we're at, which is not bad compared, but it is obviously much higher still than pandemic time. So 15-year rate, you're looking at 5.5, 5.44. Obviously, with a 15, you got a higher monthly payment. Uh, that's down to roughly 6.87 a year ago. So you got to, yeah, a year ago, rates were a bit higher. They're still in the sixes, but they were in the high sixes. Um, and then obviously everyone is still, thinking about the days of the pandemic. When you're in the pandemic, we were spoiled. We were truly spoiled. With us being truly spoiled, we excuse me, we were experiencing those 3% interest rates. So the Fed update, this is the piece where we always look to see if the Feds are going to cut the rates. They did cut the rates in 2025 a couple of times, a few times in 2025. And by that being said, uh, that's at the rate that money can be borrowed, which directly impacted the mortgage rates when the Feds dropped their rates, the mortgage rates were impacted, and those rates dropped as well. Now, that's in our favor because they're trying to encourage purchasing of homes. But with that being said, even though the rate we did experience those drops, we were still in the sixes, so it's still much higher, still less house to be able to afford moving forward. So, so the 2026 rate expectations. So my expectations is that we're going to be in the. Uh, give me one second here. All right. So my expectations is that we are going to be in the sixes. I would love for us to go below 6% because I think if we get dropped below 6%, we're going to see people coming back into the market. People coming back into the market where we're going to have that activity. Keep in mind when you have higher demand, the inventory. We'll see how the inventory looks. Price is going to be different. We're going to have resales, or we're going to have new construction being sold. So it is something to keep an eye on. But if we can, experts are anticipating that we be in the mid fives, which would be good compared to what we've had in the past. With us having that in the past, we've had some, excuse me, we've been in the higher sixes. So I think if we could get the mid fives, that would be great. We'll have a lot of lookers. Trending ideas for 2026, we talked about this before, one of them being the 50-year mortgage. If that does go through, that would be interesting. So right now, the mortgage, when you get a mortgage, it's a 30-year. You have a 15-year, 30-year mortgage. Everybody's traditionally used to the 30 years. So if they were to split the same payments into over a 50-year period, that means your monthly investment would be less. But also there's pros and cons, and that's what we talked about before. I believe that was last month we talked about that, and we'll also have probably here in 2026 have a deeper dive in regards to the 50-year mortgage. I think some of the things, obviously, one of the pros is that the monthly investment would be less. Some of the thoughts that people were thinking about, well, if it's 50 years, that means that you're going to be paying a lot more interest. But that's when people need to become a bit more financially savvy, where it's like, hey, I'm going to make an extra payment each year or two extra payments each year so that you can start getting into the principal where now you're paying down the principal versus you paying towards the interest. So that could be a win-win for people, even though the prices are still going up, but it can still impact how uh, that monthly investment is. And then the portable mortgages. So I think I'm still out on this one. But I believe the portable mortgage was like if you have a specific rate, a lot of people with the threes that are at the threes that you're able to purchase another home with that interest rate. If I'm correct, is that how that goes? But I'll come into more detail. But if that is the case, that would be helpful. That would be extremely helpful. But it's like also being that financially savvy is like, well, which one works out better for you, 50-year or just transferring your 3% interest rate? So practical financing. So a couple of ideas for people to really consider moving forward, and this is some of the financial hacks that I was talking about. So financial hacks that I would really consider would be your rate buydowns. That's a lot of that going out. Use that extra funds. It's not so much about dropping the price of the property. Maybe you can buy down your interest rate till so that you can afford it can be a bit more affordable to you. It's not so much about the total price, but maybe about what that monthly investment is. Seller credits towards closing costs instead of just price cuts. That's what I just said, right? That's exactly what I just said. So it's being a little bit more savvier when you're negotiating. So hopefully you're working with a professional that can help lead you and guide you if you're in the buy. Or even if you're on the selling side, I deal with a lot of sellers. So a lot of the sellers, I try to explain to them, this is what buyers are going to be offering. This is what they're trying to do. And this may even be an incentive for them to let them realize that they can actually afford a little bit more of a house. So that's also the good thing. So co-buying or house hacking to offset, people have been doing this for a minute. So even with the co-buying, so now you're getting multi-generational people buying the same home. So now they have two family incomes coming in, or additional income coming in, or even if they're in a situation where they're taking the property and then with the property, they're able to uh, they like add like ADUs. So that is a dwelling unit. That's an additional unit that you're able to place on the property, kind of a mother-in-law suite, where you're able to add an additional property and collect rent from that property that's on your property itself. So like on your land itself. So it may be an extra building where you have like a two-bedroom apartment or even a one-bedroom apartment that you're able to build on your current property that brings you an additional income, and then you can leverage that to help pay off the bills. A little hack, just a little hack. Refinancing. I'll give a take on a refinancing just because a lot of people, I say if you recently purchased your home, it may be of a benefit if you recently purchased your home at the higher interest rate, but also keeping in mind that does start the clock all over when you refinance. So if you're like a number of years deep with the higher interest rate, does it make sense for you to refinance? Yes, it would probably lower your monthly payment, but it also now you're at a point if you've been in there say for over 5 years, but give and take, we're still at that point where it's like, hey, you're paying at the principal versus so much of it your payment going towards the interest. So keep that in mind. Just keep it in mind. 5 years, 7 years, but obviously we're already in 2025, and those interest rates that were low were like around 2020. So it's still give and take. It depends. It depends. So, like I said, if you recently purchased a home and you're at the much higher, high 6%, that might be uh, something to still consider. All right. So, some of the opportunities and risks that we should expect moving into 2026. So, what are the real opportunities in 2026? And where should you actually be careful? And that's the thing. Everyone has a different risk tolerance. So I always say know know yourself before you start looking at everybody else and see what other people are doing. Many owners are still sitting on sub 4% rates but need more space, less space, or a new location. So this is the fact where people still need to actually move, even though they have a great payment right now, but the house just doesn't work out for them. As rates ease a bit and more options hit the market, 2026 could be a year they finally move. And this is true because they've been sitting in a position of being on the fence of buying a new home, and it's starting to, take too long. It's like, hey, these rates have not gone down anytime sooner than uh, they haven't gone down like they expected. They expected it to happen sooner. It did not happen. So with that said, you're going to get a bunch of people that are doing the move up. Make sure that you're doing your math when you're doing this. The Florida Sunbelt investors, this could be opportunities for investments and development. We're continue to look at the prices. Creates This also creates room for negotiation on the older and tired properties, especially condos and dated single family homes. Yes, so there could be some win-wins, and I've seen it already. And for those who are part of my investment group, the real estate gold diggers, uh, I shared $100,000 play of a property that was able to be negotiated down and to be upgraded to a 2025 or 2026 property with all of the upgrades. But that was an opportunity to go in and revitalize that property, but they were able to get it at such a lower price that the amount of equity, they had over $100,000 in equity in this property that they were able to leverage. So, and that was after making the repairs to it. So keep that in mind. These opportunities are definitely coming. So keep that in mind. Um, Developers lens, yep. If you guys are looking at properties, you may have to look at more of a different lens, look at these properties in a different lens. And even for me, I've transitioned from that. It's not just about rehabbing that individual property. It may be an opportunity to do something bigger. So how can you leverage or get or maximize that property? It may be able to add another building onto that land. So keep that in mind if you're developing in a single family or tearing down, building townhouses, small apartment buildings. These are great opportunities as we're looking into 2026. This is going to be a big push. Uh, Underestimating insurance taxes, especially if you're in Florida, do not keep in mind. Oh, excuse me. Keep in mind that taxes, insurance is always going to be a big thing, but this is like it's going to be some surprises to certain people as they're going through this. So keep this in mind when you're out there. So working with someone, running your numbers, and making sure uh, that you're a winner in 2026. In order to be a winner in 26, won't be for people who are tired time to bottom perfectly. It's not going to be a perfect situation. They'll be the ones who buy the right property at the right terms and the right location to hold it through the noise. So it's kind of riding a wave. So it's getting the right property that you feel that will be a great investment moving forward. So for those who have a specific buy box, this is a big thing. And I know a lot of people, they're always asking, well, what should I invest in? So this is where that buy box comes into play, especially if you are buying a property. Look at how you can maximize the property, whether it be now or even later on down the road. Opportunities will present themselves. So, guys, I know we've had I had a handful of questions that have come in. Had a couple of people saying hello, hey, hey. I see the hellos out there. How you doing? How you doing? Let's see who said hello. We like people who say hello. So I'm gonna say hello back. Hey there. So they probably like, hey, all right. So, guys, I appreciate you guys tuning in today. As you know, I am a little bit under the weather. I do apologize, but this is live, and I wanted to make sure that you guys got this information. Uh, it, it it's a great opportunity. We're wrapping up 2025. Uh, with us wrapping up 2025, we're going into 2026. 2026, there's going to be opportunity. There's actually opportunities right now. So it's just you have to look at these opportunities through a different lens. All these people that would say, "Hey, I'm waiting for the market to crash." Well, you keep waiting because it's at this point it's not crashing. So with the market not crashing, there are opportunities out there. It's really looking at uh, the market in a sense where you can actually see the bigger picture. Seeing the bigger picture, and what I mean by that is seeing how you can maximize the current opportunity. For instance, like I said, I keep mentioning this $100,000 play, uh, and it's rehabbing a property, and even this after it was rehabbed, it still had over 100,000. It was actually like 100 and I want to say 125,000 in equity after it was rehabbed, redone, revitalized. But it was understanding what to look for in that property and what made it work. So it's more than just the end number, but it was a property that will maintain its value and it'll be a valuable asset at any point when they look to resell it. So there was a number of things in that buy box that they stood by and that they're able to benefit from. So appreciate Alex, appreciate the chiming in, Alex. There, I see you. Appreciate you, buddy. Uh, so guys, this is the end of the year wrap up. I appreciate you tuning in. I appreciate you being a part of this. Um, and just stay tuned. 2026, there's going to be a number of opportunities, and it's going to be more vivid in 2026. Um, it's the opportunities are there now, but as I stated, the opportunities are there for you. But feel free to reach out if you have questions or even want to set up a one-on-one with me. There should be a link there where you can set up a one-on-one. Kind of let me know what your investment goals are. If you're in the Tampa Bay area, I'd love to work with you, see how I can help assist you. With that being said, we do have our real estate gold diggers. That's our investment squad. Those individuals, we just wrapped up our winter cohort, which was phenomenal. Phenomenal winter cohort. I was shocked. Can't wait until we do another one. Probably won't be for about a couple of months, but um, we should have another one just because it's a continuously growing group. So, with that being said, guys, hey, this is Chris Brown, real estate developer and health is wealth advocate. Appreciate you tuning in to State of the Real Estate Market. Enjoy the rest of 2025, and I'll see you guys in 2026. Take care. Peace.